Today we're going to do all about FHA. That's right. So if you're new to the channel, I've been a mortgage lender for 18 years and my team's licensed everywhere in the United States. We'd love to help you home. We're one of the top purchase teams in America, which means we know how to get you from renter to homeowner. So give us a call, 786-933-2077. Okay, shameless plug over. Let's get into it. So FHA is actually, it was the loan that I did the most of when I got into the business. So I got into the mortgage business in 2007, right before the world blew up. And what happened after 2008 is any low down payment loan, mortgage insurance wasn't available. So your only option was FHA. So I have done so much FHA over the years. As we saw mortgage insurance come back in with conventional loans, we saw FHA die off a little bit, but we're starting to see it come back up again. So let's get into the myths, the misconceptions, and most commonly asked questions. I actually asked my team to put together the questions we get most about FHA so I can go through it with you today. Okay, is FHA just for first-time home buyers? No, you do not have to be a first-time home buyer. You could actually own another house right now. Let's say that you bought a house with a VA mortgage. Maybe you don't have any more VA entitlement and you don't want to refinance out of that. You want to buy another house. You want to use FHA. That's fine. Okay. Now look, you can't have two FHA loans at the same time without it being very dramatic. But if you have another loan type, yeah, as long as you are going to go live in that house, that's the key. FHA is great. Okay. FHA is a owner-occupied loan. Now, I said that very slowly because on TikTok, I've seen videos where people are like, oh, I bought an investment property with 3.5% down. This is their dancing. And they're describing FHA, but it's not a loan for buying an investment property. It's a owner-occupied loan. Can you buy a multi-unit? Sure, but you gotta live in at least one of those units. As a lender, we're looking for you to live there for at least 1 year. So no, you don't have to be a first-time home buyer. Yes, when you're using that loan to buy a house, you need to intend to occupy it for at least a year. Okay, is FHA just for lower income borrowers? That's a question we get a lot. No, guys, you could make $10 million a year and use FHA. No joke, seriously. FHA, the loan program, does not have any income limits whatsoever. FHA actually can be a really good loan program in higher cost areas. Like I would use it in California a lot when we got into higher cost areas because you could have a higher debt to income and it was 3.5% down. Whereas in many cases with conventional, it would have been 5%. So no, there's no income limits on FHA. Now, the reason people think that is because a lot of down payment assistance programs are paired with FHA. And down payment assistance programs generally have income limits. Very important to note, my team and I do not specialize in down payment assistance programs. The only one we do is Cal HFA, which is a California specific program, okay? I just wanted to say that because sometimes people call my team and they get really mad that we don't do every down payment assistance program. And it's just because honestly, truly, you need a lender that does that program 10 times a week. You don't want someone that does it once or twice a year. So we only do loans where we can do an exceptional job for you. But no, FHA does not have income requirements. Can I apply for an FHA loan without my spouse? Okay, so here's a fun one. FHA is a government loan. So if you're married and if you're in a community property state, you can apply without your spouse on the loan, but we are going to hit you with their debt. So a lot of times when people are saying, hey, do I have to have my spouse on the loan? It's usually because they have bad credit or too much debt. If you're in, for example, California is a community property state. So they're not going to be on the loan, but I'm going to have to pull their credit. And if they have $500 a month in reoccurring debt, like a car payment, something, that's going into your debt to income. I believe right now there's only 9 community property states in America. So if you don't want your spouse's debt or their credit, I mean, their credit wouldn't be taken into consideration, but if you don't want their debt being taken into consideration and you're thinking about FHA, Google if you're in a community property state, okay? If you're not, cool, we don't care. They don't have to be on the loan. We don't have to talk about them. You know, it's great that you're married, but I don't need to see any of this. Only in community property states, okay? Let's see here. Can my down payment be gifted? Yes, guys. There are gift requirements though. It needs to be blood, family, someone who has a vested interest in you, or fiance. So we're always happy to go over those guidelines with you, but it can't just be like, oh, Bobby's gonna lend me. That's not a gift, okay? And that's with most loan programs. But yeah, it can be a gift. You know, the amount of loans I've done with FHA where a parent, for example, has gifted the down payment, or a fiance, like a lot. It's a thing. So totally fine. And they can gift the whole amount. So if, for example, let's say that you're like, well, I don't have any money, Jen, but my dad will give me 3.5%, and maybe I can get the seller to pay closing costs. Cool, let's go, let's go. You know, something to note is we will want to see where the gifter's money came from. And I just bring that up because back in the day, one of the fraud tricks that people were doing is if a borrower had like $10,000 in mattress money, they would give the money to someone else to then gift to them, which that's money laundering, guys. You can't do that. So they do verify where that money came from. You know, if your dad has money in his bank account, cool, easy to show. And they don't have to send it to you. We're always happy to talk to whoever the donor is directly, because I know like that can always feel weird, but I've only had, you know, in 18 years, I had one parent that was really mad. But as soon as I was like, look, it's just gonna go to me, they were fine. They just didn't want their kid knowing how much money they had. That's it. Okay, do FHA loans require PMI? So PMI is mortgage insurance. They don't require PMI because that's private mortgage insurance, but they do require mortgage insurance. So FHA is the only loan where even if you put down 50%, you still pay mortgage insurance. Seriously. And the mortgage insurance is for the life of the loan unless you're putting 10% or more down. Look, if you have really good credit and you have a big down payment, I would not put you in FHA. Like there would be maybe 2 or 3 reasons why it might make sense, but overall it's not the right loan. FHA is a good loan if you want a low down payment. I really like FHA for house hacking as for first-time home buyers, even second time. You know, if you can find a 2-unit, live in 1 unit, rent the other, do FHA 3.5% down, I like that. That is cool. But if you're gonna put down 20%, you have an 800 credit score, FHA is not the right loan for you because of this mortgage insurance requirement, okay? The other thing that lenders never tell you about FHA is FHA has an upfront mortgage insurance premium. What that is they charge upfront 1.75%. That gets financed into the loan, but you also have monthly mortgage insurance on top of it. So a lot of times home buyers go, well, FHA has a lower rate and the mortgage insurance is less, but it's like, wait a second, guys. There's that 1.75 fee. So let's think about that if we're doing apples to apples and really be awake and aware, as well as how much you're putting down, you know, 5% down, what's the odds, the appreciation in the market, you know, there's a lot to consider. And that's something my team and I do. We're never just gonna say, do FHA. There's a lot of lenders that do that because it does have lower rates. And at the surface level, you know, most people go, lower payment, that's what I want. But there's so much more, right? So we always dig into the weeds with you so that we can help you make the best decision for you, okay? Look, it doesn't matter what type of loan I do for you, I get paid the same, okay? Now, some lenders are really pushing the FHA even when it doesn't make sense just because they're scared to tell you what conventional rates are. I'm not. I'm happy to show you everything and explain the pros and cons of both because there are. Okay, let's see here. How much is an FHA down payment? 3.5%. How many FHA loans can you have? I talked about this a little bit earlier, But with FHA, really one. Now, there can be exceptions where if you're moving over 100 miles away, we're not counting projected rental income, you jump through a ring of fire, yes, you can have more than one FHA loan, but it has to meet a really specific hoops of fire, guys. So I look at FHA as like you can have one. Now, if you, let's say you buy a house with FHA and you sell it, can you do FHA again easily in the same neighborhood? Sure, absolutely. So just know there's always things to consider. What are the benefits of an FHA loan? Okay, so I talked about this a second ago. I love FHA for house hacking. I love it. I love it, love it, love it. If I was younger, guys, if I hadn't already bought houses, like if I was just starting out, I would be looking for a 2-unit and I would want to do FHA 3.5% down. I would live in one unit, I'd rent out the other one. That's a great way to get in real estate. I love that. That's really cool. So I like FHA for that. There is a conventional program where you can do that, but like no one qualifies for it, is what I've seen, not as easily as FHA. So I really like FHA for that. I like FHA because it's more forgivable to lower credit scores. So if you're looking at FHA versus conventional and you have a 620, your payment's going to be so much better with FHA. The mortgage insurance is the same regardless of credit score. So if you have really good credit, conventional is often better because the mortgage insurance is cheaper than FHA. But if you have really low credit, guess what? FHA is going to be a really good benefit for you because you're going to get lower mortgage insurance by quite a bit than if you did conventional. So I really like FHA for lower credit scores. Now, keep in mind, guys, if you're a veteran, you should be doing VA. This video does not apply to you, okay? Except for certain circumstances, call me about it, but I want to be crystal on that one because it's two different worlds. So this is really FHA versus conventional. I also like FHA because it's more forgivable on foreclosures and short sales. It's a shorter time period. The other reason people use FHA, and I do this, but I talk to you about it because it's super important, FHA can have a higher debt to income. So for instance, with conventional mortgages, you're capped at about 50. Once in a while, you'll get it a little over. With FHA, you can go up to about 59%. So if, for example, let's say you're buying your first house and you have a bunch of income I can't use. Let's say you have a base, but you've only been commission as well for a year. You're making an extra $5K a month. I'm not even counting it. You know, in a situation like that, do I think FHA can be a good option to get you to that higher price point? Yes. But if you don't have that extra money, would I ever recommend a 59% debt to income? No. And that's what you've got to watch out for, because a lot of times a buyer will call me and they'll be like, yeah, I'm doing FHA. And I'm like, but your credit's 800, did the lender tell you why? No. A lot of times it's because of debt to income. You always want to ask the lender, what's my debt to income? And if it's like over 50, you guys need to be doing a budget. You should do a budget anyways, but like, unless there's income they're not using, and you can ask, how much income are you using for me? I wouldn't go that way. That's like the path to house poor, especially if you're in a state with high state income tax. Okay. Accounts in dispute. So the one thing about FHA you should know is that if you have a bunch of accounts in dispute, we're going to be asking for you to take them out. It depends on how much it is, but FHA is a really finicky loan when it comes to accounts in dispute. And I just bring that up because that's the one thing with FHA where I've seen a file where I'm like, oh, this is pretty decent. But then it gets kicked back because of accounts in dispute. We have the borrower take the accounts out of dispute and it becomes a decline. So watch out for that. Those are the big things. The other thing is make sure you look up the FHA loan limit for the county that you're looking in. So with conventional loans, the base is $806,500, meaning you can have a loan up to $800, $6,500 anywhere in America with 3% down. FHA is different. They have different loan limits in different counties. So definitely make sure the lender that you're working with is looking this up. And if you're looking in multiple counties with FHA, you gotta know the loan limits. Now, if you're like, Jen, I'm looking at 200K, you're fine, guys. Every county goes to 200K. But if you start pushing, 5, 6, 7, 8, you want to look up the FHA loan limits. So look, I hope this video was helpful. I really like FHA. I have used FHA so many times in my career to help people get into houses, and they've had a really good experience. So questions, comments, as always, reach out, hop on the calendar. Let's get pre-approved. We fully underwrite all our pre-approvals. We go through what to expect with closing costs. Like, we're here to make sure this house is a benefit and not a burden. Or give us a call, 786-933-2077. And yes, 7 days a week, I've got a licensed loan officer during business hours there to answer the phone and help you get home. Thanks for watching.